Hello. Welcome to my channel, my dear friends. My name is Avinash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of gold USD in front of us. And as expected, market did not show any crazy move and market mostly closed on a silent note. We did not get any trend reversal moves. If you look at the chart carefully, then we can still see the market is still inside the huge symmetrical triangle only. Yesterday, gold tried during the US session to cross the triangle here, but there was some sharp price rejection when the news of Canadian dollar came out. There was some sharp price rejection from above, and ultimately gold closed inside the symmetrical triangle only. And if I zoom in, then we can clearly see that there is no clarity regarding the direction of gold as well. So in simple words, the chart of gold is not very good to trade right now because we don't have any clear direction regarding the next move. Maybe the market is waiting for the CPI that is coming on Tuesday. CPI is a big event for Forex traders. So yes, we may get to see some crazy moves, a particular direction on the chart of gold by Tuesday. But as of now, we don't have any clarity regarding the direction of the market. If you look at DXY, then we can see that DXY was also inside a symmetrical triangle pattern that we discussed. There was a big drop, and right now DXY is slowly showing some recovery, but the recovery does not have much potential. We can see that the strength of the buyers is missing, the power is missing somewhere. So definitely we can expect that on Monday, if the same upside continues, then market will be facing some resistance around the previous support levels. First of all, DXY will face some resistance around the previous bounce level of 103.70, and if it crosses this level, then DXY will face some resistance around the trend line, which was the previous support. The previous support will be acting as the new resistance for DXY, especially in this market condition where we do not have much buying power. So in simple words, we are expecting that as the buying power is missing, the power of the bulls are missing. So we are expecting that if DXY tries to go up also, the resistance will be working. If market reverses, we can plan our trades accordingly. In case there is a sudden drop on DXY by Monday, we can expect 103.40, 103.20 to act as the next immediate support. That's all about DXY. Now let's head towards gold again. So to understand the chart of gold better, we need to move to the 1-hour time frame, because if we go to the weekly time frame, you can see that we do not have any clarity. If we go to the daily time frame, then also you can see that market is inside the range, no clarity. So as a result, we need to focus on the hourly time frame to understand the chart better, to understand the levels better. So yesterday, when there was a sudden spike in the market, gold made a high of 1973 and came down immediately. So day traders, 1973, yes, 1973 is the next immediate resistance where we can expect the market to face some selling pressure on Monday. The market opening will be important. If we get to see a typical Monday market where we don't have much volatility, where the volume will be missing, then we can expect that market will face some selling pressure around 1971 to 1973. Okay, 1971 to 1973. If market reverses from this level, we can go for a sell. In case market shows some volatility, if market shows some volume, then you can expect 1983 to act as the next immediate resistance. 1983 is not a very strong resistance, but in this market condition where we can see that on lower time frame gold is stuck in a range, we can definitely expect 1983-84 to act as a resistance. If market goes up and reverses, we can go for a sell position. Otherwise, if the volume is missing, we can expect 1970 3 to act as the resistance. So it depends on the scenario, it depends on the volume and volatility which will work. But for that, at first market will have to cross the symmetrical triangle pattern here, okay, which is a big one. Okay, so these are the two trading opportunities we have on the chart of gold if gold moves up right after the market opening. And as you can clearly see that we have a very big candles here, so we don't have any clarity. So as a result, it's better to avoid any position in this range here, as we don't have any clarity. And my dear friends, if you look at chart prime, then you can see that chart prime generated many signals last week, and you can see buy, sell, buy, sell. Almost all these signals generated by chart prime did pretty well. Okay, and you know it very well that chart prime is a new custom indicator in the trading world that is rocking the world. So the signals are very good, and the new advanced form of chart prime, okay, is also great, because we can see that apart from the signals generated by chart prime, it is a very useful tool for the traders who want to analyze the market and understand the market better. The tool generates signal, buy and sell signal for you. The green line you can see tells you about the trend of the market so that you don't mess with the trend. Secondly, the lines that you can see on the middle of the chart are the dynamic support resistances, so that your job becomes easier. You don't need to draw any lines, because you get the ready-made support and resistance from the chart prime according to the market scenario. If you love to trade on divergences, if you love to use oscillator, then you can see the chart prime oscillator pro, the new tool. It marks the oversold, overbought levels, and also it tells you about the divergences so that you don't miss anything. And if you prefer to trade on smart money concept, then yes, they also have the market dynamics pro that marks the order blocks, change of character, break of structure, everything. It also has pattern detection as well. So my dear friends, chart prime is a one-stop solution for traders who wants to take their trading to the next level. You can see here they have three indicators: market oracle pro, market dynamics pro, prime oscillator pro. Okay, so if you really want to improve your trading, then you can definitely check out. This is a scan. It's a QR code on the screen that you can scan. You can see that right now they are giving a 30% off. If you're interested, then you can check it out. The link is also in the description box. So let's get back to chart again. Chart of gold. So if market moves up, if the volatility of the market is low, then obviously we can expect the resistance to work here. And in case market shows good volatility, then we can expect 1983 to work as the resistance. So these are the two resistances. And if market drops, okay, if market drops, then the best support, if market drops, the best support is around 1938, 1937. This whole level is a support zone for the market, because as you can see that gold is right now trading inside a range here. So as a result, we are considering 1938 to be the best support. So 1938 to be the best support, or the best immediate support for the market. But before 1938, we also have few levels. Example, 1951 that we discussed yesterday. 1951 is still present. Then we also have 1955. These are the two levels on the chart of gold that you can expect to provide some support to the market before the US session on Monday. We have derived these levels. We have derived these levels with the help of Fibonacci. On Monday also, sorry, not Monday, on last Friday also we discussed about these levels. As you can see, the as gold has formed a new top here, so the levels have changed a little bit, okay, not much. So if market shows a drop on Monday, then 1956 to 1955 is the first support. For day traders, you can at least expect a minor bounce. See, these are Fibonacci retracement levels. If not a complete trend reversal, at least you can expect a minor bounce. And then you have the next level around 1952.50 to 1951. So overall 55.51 is still valid, but as gold made a high here, so the level have changed a little bit. So 1956 to 55 is the first support for day traders. You can expect a bounce of 40-50 pips if market comes down on Monday. Secondly, 1952.50 to 1951 if market breaks 1956 and heads lower. So on the chart of gold, we have three good levels: 1956 to 55, 1952.50 to 1951. But for you can expect a temporary bounce around these levels. The ultimate support on the chart of gold is a 1938 only. 32 is also there, but that level is far away, so no use of talking about it. Okay. And if you're wondering about a trend line, then yes, we do have a trend line before 1938. But as of now, let's focus on this particular portion of the market. As I said, we don't have any clarity regarding the direction. So let's wait and watch how the market reacts. Bye-bye, take care. And we enjoy the weekend. Keep in mind, this is my lesson. I can be wrong as well. So follow proper risk management, do your own research and analysis. Bye-bye, take care. Do not gamble.